Ethereum is getting all the hype these days, and, to be very honest, it actually deserves this, and much more, because it is always looking to improve with new upgrades and latest innovations. But this doesn't mean that this crypto isn't lacking in some aspects, and there are some things that only the experts in crypto world know, and no one talks about them. So, what is actually happening to Ethereum? Let's find out more in today's video. Hey guys, and welcome back to Investing Few. If you are new to this channel, please like, subscribe, and press the bell icon to get new video updates. Make sure to do so if you want all the latest news on cryptocurrency. So without any further delay, let's jump right into the video. Less than a month ago, Ethereum, the world's largest altcoin, was trading at all-time high levels of around $4,300. The crypto's price performance since, however, has been underwhelming, to say the least, with ETH pulled down the charts by Bitcoin's own fall below $40,000. Since the aforementioned depreciation event, recovery has been slow, with the altcoin priced at just under $2,500. The altcoin, as it has been for the past 2 weeks, was continuing to trade within the price band of $2,200 to $2,800. Understandably, ETH's time on the charts has bred the very obvious question, what is happening to ETH right now? Where does ETH go from here? For the purpose of this video, let's focus on the first question. For all the bullishness that has come to be recently associated with the crypto market, that is a very valid question, especially since there are speculations that there might be signs of capitulation. Are there? According to sentiment, the answer is in the affirmative. The weighted social sentiment for Ethereum, for instance, is at its lowest level since late April. Before these two instances, the last time the said metric was so low was back in October 2020. What this finding suggests is that the social sentiment has indeed capitulated. What it also means, however, is that there is a strong possibility that the price can only head north from here, especially since previous dips to these levels have always been followed by bouts of price appreciation. The exchange inflows metric made for similar reading, with the same registering a huge uptick on the charts over the past 48 hours, to indicate that more and more people are moving their ETH onto exchanges for the purposes of sale. On the contrary, it's worth noting that historically, there have been cases where such hikes have been followed by price hikes. Ergo, some good might follow such capitulation. Here, it's also worth looking at something like token age consumed, a metric that plots the movement of previously idle ethers as a measure of whether big market players are indeed heading for the exit. According to the data analytics platform, a string of age-consumed spikes last day. Capitulation? Maybe. There are other metrics too, indicators that, while not really revelatory about whether ETH holders are capitulating or not, do highlight which direction the altcoin might be heading. Address activity, for instance, hasn't quite recovered to climb close to the highs seen in mid-May, despite the crypto's price stabilizing somewhat. This is a significant bearish concern. What's more, as per the Ethereum price NVT comparison charts, the amount of circulation for Ethereum has been slowing down considerably in June, and dropping more than half of its market cap in less than a month has caused hesitation from traders. Our NVT model is showing its first bearish bar since April 2020. Here, it's worth noting, however, that there are some positives after all. Whale addresses, for example, are holding steady, despite the fact that the accumulation trend might have stalled somewhat of late. Finally, despite there being some signs of capitulation, Ethereum fees have continued to remain steady, with the same having recently fallen to levels last seen in January. Ergo, are there signs of ETH holders capitulating? Definitely. Does that mean that the altcoin is bound to head even lower on the charts? Now, that's a question rife with uncertainty, especially since there remain metrics and indicators that are arguing the opposite. Crypto markets are still indecisive, with the bulls and bears battling it out, but the next few months could be very good for Ethereum. Crypto assets have bounced back into their range-bound channel again today, following the bullish news. Bitcoin is still down 43% from its all-time high, however, and the market sentiment appears to have turned bearish overall. Ethereum has not fared quite as badly, with a 39% decline from its peak price to current levels, which are around $2,580. Usually, the rest of the crypto market plunges deeper than Bitcoin during these heavy pullbacks. ETH and ETH DeFi will have an unprecedented run over the coming months, given ETH could flip BTC soon, based on strong fundamentals. Bullish fundamentals. The first argument the investor makes is that Ethereum fundamentals have never been stronger when compared to Bitcoin. This should result in a narrowing of the valuation gap as ETH market capitalization grows. At its peak, Ethereum market cap hit $500 billion. To put this into perspective, that is the same as Bitcoin's was at the end of December 2020. As ETH's valuation rises, this should be a rising tide scenario, and DeFi will benefit the most given it is the fastest growing subsector within the ETH ecosystem. Ethereum now settles 4 times more in gross volume, including stablecoins, than Bitcoin, which is being driven by the parabolic rise of decentralized finance. DeFi will not be slowing down, with major protocols launching upgrades and implementing Layer 2 scaling. The fundamentals of major lending protocols and yield aggregator protocols on ETH have been incredibly resilient during this volatile period. Ethereum is also generating much more than Bitcoin in terms of transaction fees, which isn't so good for users, but is for network value. Crypto Fees currently reports that Ethereum generates over 80% more than Bitcoin in 7-day average fees. EIP 1559 inbound. The market is also currently failing to price in the benefits of EIP 1559, which is estimated to launch with July's London update. Though this will not directly reduce gas fees when demand is high, it will have an effect on deflation as they get burnt. The final argument is that institutional investment has never been greater, and this is unlikely to slow down given the above fundamentals. Additionally, the Ethereum to Bitcoin ratio pattern just changed, and it may be something to watch. For the last few weeks, Ethereum has been looking like high beta Bitcoin. When Bitcoin went up, Ethereum went up more. When Bitcoin went down, Ethereum went down more. This was starting to catch the attention of a lot of people on Wall Street, and in general, there's been a lot of attention paid to Ethereum's relative strength, particularly on the way up. But for the first time in a while, we seem to have a crypto cycle that's centered on Bitcoin, with the most likely catalyst being the El Salvador news recentering people's attention. So you can see that since yesterday's low, we've had a huge surge in Bitcoin off the bottom, and at the same time, the Ethereum to Bitcoin ratio has tumbled. Anyway, it's something to watch to see if this is the start of a new narrative or a one-day blip. One other interesting development is that Solana, which backs an Ethereum competitor, just had a huge fundraising round, which may be further slowing some of ETH's momentum. So, that brings us to the end of today's video. If you have watched till the end, then you know we talked about what's happening to Ethereum, how its fundamentals could strengthen against Bitcoin, and also about the shift in Ethereum-Bitcoin ratio. Now, you can share your thoughts in comments regarding this whole discussion. Also, do not forget to mention suggestions for upcoming videos related to cryptocurrency that you want to watch next. Also, if you enjoyed this video, do not forget to smash the like and subscribe buttons. Thanks for watching.